It is 5 o'clock in the morning on Wednesday, the 15th of November. Well, it is here in Thailand anyway. Okay, this is a dollar yen chart. As you can see, pretty much just going sideways for the whole of this year. We are back up testing the March, July highs, May, July highs, and we weren't a lot higher in March and February. Okay, so let's look a bit closer at this. As you know, that trend line and the Fibonacci resistance up there and the one in the mid sort of 114 area was the major resistance, which certainly worked. It looks like we have a potential head and shoulders reversal pattern to reinforce this resistance here. A break below the neckline, which is at around 113.2010, would confirm that pattern and therefore would send us lower. And it certainly looks like we are seeing dollar weakness. We'll go on to that in a second. So you'll know I've been following this perfect inverse head and shoulders pattern on the dollar index, but maybe too perfect. It just didn't work. We hovered above the neckline for a couple of weeks and then plunged yesterday back below it, indicating failure of this pattern. Been thinking lately, these very, very obvious patterns just don't seem to work anymore. It just seems like there's too many people, too many retail traders that see it. It's all over social media these days, something that obviously didn't happen when I was in the thick of my trading on the floor. You didn't have this wide social media discussion about these patterns, and you didn't, and the whole world was not involved in the trade as it does appear to be now. And maybe it's just this retail factor. All the retail traders were long the dollar, I would imagine, on this, and short the euro, and it was just overwhelming. Anyway, I'll have to think about that a bit more, but it does seem that when these patterns are so obvious, they just don't work anymore. So we have collapsed back through the neckline, back through the 23.6% Fibonacci support at 94.03, and now testing the 100-day moving average. I guess there is a chance that this could be a fake. It could be a fake. It could be squeezing out all the retail traders from this trade, and then we hold the 100-day moving average, turn around and absolutely rock it up. That advice isn't much use to you, because what do you do now? You know, in theory, the pattern's failed and therefore we shouldn't be long, but I just wouldn't be surprised to see this fake and then the market rocket, you know, having shaken out the retail traders. I don't know what to say to you. You'll have to decide what you want to do with that, but I just, you know, that's my thoughts. And the euro versus the US dollar gives us a different take on that. This does look much more positive for the euro, much more negative for the dollar. Pushed back up through the 23.6% fib at 116.80. That was also the neckline. We had paused there, and in theory that was a selling opportunity, but of course we got stopped out on any shorts, and we pushed right up through the 100-day moving average at 117.36 now. So this all looks pretty positive. We're above the 55-day moving average. We're above the short-term Fibonacci level at 117.58. It does look positive. There's absolutely no reason to be short the euro now versus the dollar. So in that respect, the pattern has most definitely failed, and as I say, too risky to be short the euro. New Zealand dollar, we were short up here around 69, 60, 65, I believe it was. For reasons I told you before, it was below the 23.6% fib due to some short-term action, which I won't bother to show you, I haven't got time. But being short the New Zealand dollar certainly did work, and yesterday we dipped as low as 68.43, so we've held above the previous low in October at 68.16. I don't know what happens next. To me it looks negative, but I've got this nagging doubt in the back of my head because of the dollar weakness. So I don't know, maybe we'll just trend sideways, maybe we'll bounce around sort of in between 68, you know, the mid to low 68 area up to the high 69 area. Maybe we'll bounce around sideways, just like the Aussie's done lately. Right now, if you've been short, you've had a good run for the last 3 or 4 days, it's probably worth taking some profit and sit back and see what happens, because the market's becoming a little bit unpredictable right now. Taking the dollar out of the equation completely, the euro yen is really does confirm that euro strength, doesn't it? The yen is also strong against the dollar, as we've seen, and we've got that potential head and shoulders pattern in the dollar yen, but the euro is definitely the stronger of the two. You could argue that this is a broadening top, but I don't have an awful lot of confidence in that pattern, so I'm not going to take that into account, but I just thought I'd let you know. So it's obvious what the range is. We can trade the range within these trend lines and then wait for the break point. So on the upper end, we've got sort of mid 134 area, 134.50, 134.60. On the downside, we've got around the low, yeah, 131.30, 131.20, which coincides with the 100-day moving average at 131.10, but of course that'll be higher by the time we get there. So those levels would be worth trading while we wait for the breakout. In the middle here, there's just nothing to say. It's just no man's land, so we could just drift around. This is a chart of the dollar versus the Canadian. I have to admit, this pair baffles me. I just can't seem to get it right. Anyway, right now I really don't know what to say about this pair. Clearly we're in a bear trend recovery. We've been going down since May. We've now seen a decent bounce. We couldn't get near the 200-day moving average. You know, honestly, I don't know what happens next. I really don't. I'm just going to have to leave that one alone until I get a clearer picture. Okay, WTI crude. I really feel I did my best possible in this market. You know that the big resistance was up at the sort of $59, $60 area. But with the negative candles that I saw, I did warn very, very early on, about a week ago, or certainly a few days ago, that we certainly needed to be out of our longs and thinking about getting into shorts, maybe starting to getting into shorts. I did say don't fire the whole maximum position in one go, because we could reach up to the $59, $60 area, but worth getting into some shorts. Well, that was the right call, because we certainly could have pushed up to test that resistance, so we could have spiked up above it as well. So, but we didn't. If you did, you certainly should have been out of longs. So that's a good call. And if you were slowly getting to short positions, well, at least that has worked as the market plunges. So we'll see what happens down at the first fib support at 54.17, and if we keep going, we could be down around the $52 area. Not looking too good for oil at the moment. I know there are some huge speculative long positions, so not really a surprise that we've started to come lower. Quick look at Bitcoin. Obviously been very volatile. Good recovery yesterday. Well, we're in a bull trend. That's all that you can say. We are in a strong bull trend, and we've bounced off. You'll know that was a good support level down there, actually. I had support around the 55.90, 55.50 area. So it's a Fibonacci support, 55-day moving average with some other bits and pieces. So we've held that. I don't know what happens next. We could just trade sideways. It's you know, we've had one hell of a run, so consolidation would be normal for a market to do that, although this is not a normal market. We certainly were very overbought, and we've actually just touched the oversold line the day before yesterday, so not surprising to see a bounce back, but I can't see any clear pattern here. There was no even indication that we were about to plunge. This isn't a particularly negative candle, so again, I'm just going to have to wait and see. I'm feeling slightly confused. It does happen to me every month or two. You get to a period where you're confused, you can't really figure out what's going to happen, and it takes a day or two to get some clarity again. Even the S&P suggested we would trade sideways, and that's exactly what's happening. Nothing massively negative here. I don't see any sort of huge correction at the moment. We have seen a good correction in the European stock markets, DAX in particular, but we do have terrific support around the 13,000, 12,990 area in the DAX, and that held absolutely perfectly yesterday. So I think there's a strong chance that the DAX has bottomed. We've seen the correction, and the DAX will continue higher now. Let's see if that 13,000, 12,990 level holds. I'm not going to bother looking at gold and silver. They're dreadful. They're just going sideways. There's nothing going on. I've got no opinion whatsoever, so I'm just going to have to wait for them to break out of the ranges. I think that's it.